Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here at the New York Stock Exchange. Well, it is the final trading day of 2024, and the major indexes are looking at double-digit gains this year. The S&P 500 up about 24% this year as the Dow has gained nearly 13%. It's the second straight year, in fact, for the S&P 500 of 20% plus gains. Well, traders have taken profits in recent weeks after what was a post-election surge. Upbeat U.S. economic growth, earnings expansion, and artificial intelligence momentum fueled gains throughout the year. And as the New York Stock Exchange prepares to usher in 2025, it too continues to honor the life and legacy of former U.S. President Jimmy Carter. He died Sunday at 100 years old, and the Stock Exchange will be closed next Thursday, January 9th, for a day of mourning. Well, as we embark on the final trading day of 2024, let's take a look at what's on tap. Mortgage rates are approaching 7% just 2 weeks after the Fed signaled that less hikes are on the horizon in 2025. Less cuts, we mean to say. Will things get better for potential home buyers over the next few months? Well, Aaron Sykes, founding partner at Sykes Properties, will give us the scoop. And we're counting down to the ball drop at midnight. Michael Phillips, a member of the board at Times Square Alliance, joins us to discuss the festivities that'll be taking place tonight in Midtown Manhattan. Elsewhere, ETFs hit a historic milestone this year. Michelle Singletary, personal finance columnist for the Washington Post, will tell us what it means for investors and how Americans should be aligning their portfolios ahead of 2025. Well, we always keep a close eye on the markets. A lot of that trading transpires here behind me at the New York Stock Exchange. And joining me now with more on markets is Keith Fitzgerald. He's principal at Fitzgerald Group. Keith, it's great to see you. Happy early New Year. And as we get ready for 2025, what are your takeaways from 2024?
Well, I got to tell you, Happy New Year to you ahead of time, and I couldn't be more thrilled to see the year wind up the way it is. You know, 2 consecutive years of 20+% gains. We've got AI emerging. We've got lots of other big money on the move, trends, robotics, etc. To me, this is a logical extension to where the world's going. Investors who are trapped in where the world's been have missed the boat, so they've got a lot of ground to catch up with.
Keith, in terms of what the recent selling means, how should investors digest some of that?
Well, here's what we have been telling our folks is you take a deep breath. This was highly technical. It did not disturb the business case for owning the world's best companies, which actually is getting stronger by the minute. So yeah, it's no fun. Yeah, it causes uncertainty, but it's not a big deal. In fact, it's perfectly normal because the markets require buying and selling to work properly. It just feels different because it's the end of the year.
How does this set us up for 2025?
Well, it's funny you ask because that's exactly what's on our plate this morning to just talk with about clients. The markets are the only store on earth, Christian, where people fear a sale. I think it sets up a very strong year ahead because this cleans out the weak money. It means the strong money can grab a hold, stay on the right stocks all the way to the buzzer, just like a rodeo.
Mm-hmm. And in terms of investment themes, obviously, as we mentioned, artificial intelligence drove a lot of the gains early on in 2024. Technology growth, is that a theme that you expect to play out, and how specifically so in the new year?
Well, that's an interesting question. Yes, we do continue to see the market led by U.S. big tech in particular. Investing in AI and robotics and all the derivative technologies is one of the single largest recorded themes in human history. This is not a temporary aberration. This is going to be with us for decades to come. So we're going to continue to play on that. But what we're going to do is look for those tech names, of course, but we're going to look to broaden out the use case. Is it going to go into finance? Is it going to go into defense? Is it going to go into healthcare? Those are all areas that are key concern, key focus for us into 2025, which we think, by the way, will finish next year somewhere north of 7,000 if things go our way.
Wow. And in terms of a percentage basis, that looks like another double-digit gain, doesn't it, Keith?
It does. And history shows very clearly when you get 2 consecutive 20%ers, the odds are very good you'll get a third. Now, obviously, nothing keeps going in a straight line, so we're expecting a pullback mid-year or so. But then again, assuming that we think things play out the way we are hoping, we're maybe 7,000, 7,100 even this time next year.
Interesting. Now, Keith, President-elect Donald Trump made many different promises along the campaign trail. Of course, one of them was tariffs. Another one was mass deportations. regulation, less of that, lower corporate taxes, also many things that Wall Street expects from the president-elect come January. What's the timeline that those promises play out in the market?
You know, it's very hard to say. I mean, I'm not smart enough to do politics. I do money, right? And my take is that if it introduces certainty, traders are going to want to get ahead of that. So I think they're going to probably get on the gas pretty quickly when it becomes clear that those policies are going to be for real. If they're not, then I think there's going to be a little hesitation. But either way, the theme, the robotics, the AI, the quantum computing, all of those things are going to develop anyway. So the only question is when. Maybe it's a little later into Q1 or even Q2.
Usually we do see some selling in the first quarter. Happened later than normal probably last year. Keith, how should investors be navigating that? Do you see a perhaps seasonal pullback in the first quarter of the new year?
I think that'd be entirely expected, but I do encourage investors to think very carefully about the stocks they want to buy or maybe they don't own enough of right now. Because if there is a pullback, that's the opportunity to go shopping. That's the opportunity to land the big names that you maybe don't have enough of. You don't get that chance very often, especially now with the computers involved, with the big money on the move. You got to pick your bets carefully, and believe it or not, that's an advantage for individual investors.
Now, with rates expected to stay high, Keith, and economic growth expected to be solid based on all indications, including what we heard from Fed Chair Jerome Powell just a few weeks ago, how should someone look at including bonds in their portfolio?
Well, my take is those are always relevant. And, you know, people make the mistake of assuming that they're not just because maybe they're like watching paint dry or they don't understand them precisely. But to me, bonds are an element of stability in your portfolio. Just like you build a house on a great foundation, bonds can be included to do the same thing. So you get equity-like returns if rates drop, but you get the stability and the income that is important to so many investors.
And in terms of setting up themes for the new year, growth, technology, still very much in focus for you, Keith. Any other sectors, perhaps like financials, as you mentioned? What about consumer discretionary, knowing that some of these discretionary names have lagged the broader market?
Well, that's an interesting question. My belief is the answer is no, because those are fickle stocks. What I want to do if I'm going to look at retail or consumer stuff is I'm going to look at the people who sell that. I'm going to look for the Walmarts, the Costcos, the big retailers where customers are going to go. I'm going to look to the Apples of the world where they're going to be using finance and apps to connect to all that or to go shopping, Amazons. Those are the names that we're going to look at if we want to play that sector.
Keith Fitzgerald, thank you so much for joining. Happy New Year to you. I hope you'll join us in 2025. Keith is principal at Fitzgerald Group.
Happy New Year. Cheers.
All right, well, stay with us because up next, our next guest says they're seeing an uptick in momentum in the housing sector over the past few months and find out what could be in store for 2025.
If someone came to us 5, 6, 7 years ago and said, can you produce a sugar-free or reduced sugar, low-fat or no-fat, plant-based, dairy-free, indulgent ice cream, we could not have done that. Today, we have the high-intensity natural sweetener to produce it with low to no sugar. We have the protein-based ingredients that are non-dairy that can replace the milk or the dairy. And we have the ingredients to help impart a very rich, creamy mouthfeel to make the product indulgent and also prevent ice crystal formation during freeze thawing. And so it's a capability that we've built that has made us much more relevant to more opportunities than we ever have had. The original stevia leaf extract products that came out, I'll call them the early generations, did though have, which is typical in early generation products, had a bitter or a licorice off taste associated with it. Since then, we've been able to develop through using natural stevia leaf extract, enzymatic conversions to isolate the best tasting stevia components. And honestly, they're really great tasting, clean tasting products that are still 300 times sweeter and give you that healthy opportunity to either reduce or completely eliminate sugar in a food product. And then we work from a texturizing standpoint to build back the mouthfeel that's lost when sugar is replaced. And we call that build back texture.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here at the Stock Exchange. Earlier this month, the U.S. 10-year Treasury yield spiked above 4.6% after the central bank signaled that we could see just 2 rate cuts instead of 4 next year, as well as the Labor Department's weekly report showing the number of continuous claims hit a more than a 3-year high. Well, the 10-year yield, considered a benchmark for mortgage rates, has impacted the housing sector of late. And according to data from our parent company, Intercontinental Exchange, the average 30-year fixed mortgage rate is sitting close to 7%. Represents a considerable increase from September, when the figure was just above 6%. Well, could we see mortgage rates on the move in 2025? Joining me now with more is Erin Sykes. She's founding partner at Sykes Properties. It serves the Golden Triangle of New York, New Jersey, and Florida. Erin, I know you spend a lot of time traveling as well. And how does the housing sector look as we look to round out 2024?
So we're looking for a better 2025, and I will be blatantly honest, 2024 was not great. We still had those higher prices. We kept thinking that these mortgage rates were going to come down, and if you had asked me a year ago, I would have said, yeah, it would be 6% by the end of 2024, but here we are back at 7%. However, I think a lot of uncertainty has been taken out of the market post November 5th. At least we have a direction as to where the country is going, and we can count our chickens, so to say, and we know that prices are going to moderate, but we're really getting more back to normalcy. So that doesn't mean they're going to go down. It doesn't mean they're going to stay flat. It just means that we're going to see that 2 to 4% bump each year versus a 10 or 20% bump that we saw, and then this holdout for a drop that never happened.
Does that provide more stability to the market, more routine rises versus some of the more dramatic swings?
Exactly, and coupled with a more routine inflation increase, so if we get back to about 2%, 2 to 2.3%, and then we have that 4 to 6% increase in home prices, that is where we feel comfortable, and then we will see that mortgage rate pull back this year. I'm very confident. I don't think we're going to ever go back to 4 or 4.5%, and I don't want to see us go back that far. But if we go back to about 6%, we have moderated inflation, moderated increases in prices, more or less flat rents. That sets us up for a balanced market that's fair on both sides.
For people who are on the sidelines, what is the best way for them to navigate this market if they are looking to enter in the new year?
It depends on where you live. So there are about 10 states that are back above pre-pandemic inventory levels, which of course gives more opportunity to buyers. And you're in more of a buyer's market. Florida is a big one. Also Austin, Texas, Arizona, the places where we saw these crazy run-ups in 2021, 2022, we're seeing those locations softened. Also where you see more insurance increases because we've had a tough ride over the last couple years with hurricanes in Florida. Our insurance rates are really high, and that is pricing some people out of the market, thus creating opportunity for buyers to come in and get a good deal.
How closely do you look at the affordability factor between renting and owning?
Yeah, well, you know, in New York, there's actually been quite a lot of coverage here about how many people that could afford to buy have simply chosen to rent because it makes more economic sense. I think that's going to shift. I'm very, very bullish on the New York City market. I think people want to be here. You never count New York City down. And we're starting to see a lot of deal flow from the almost completed condo projects to, you know, away from renting. Now, there's not a lot of condo projects in the pipeline. So if you want something brand new, then you've got to basically make the deal now before they're sold out. So I think that that's going to take some of the momentum away from renting. We're starting to see concessions for renters that, you know, get 1 month free if you sign up for a year lease, or the buildings offering broker commissions, which they hadn't been doing before. So when you start to see those elements come into play, you know that the rental market is flattening.
What makes a condo attractive to a potential buyer?
So it's lock and leave. You don't have to do anything. You don't have to lift a finger, especially if you're using it as a pied-à-terre. You can leave for 2, 3, 4 months, for an entire season if you want, and you can walk back into a well-maintained apartment. The same thing with views and what you can actually get in a condo versus a single family home. When you have a single family home, there's a lot more maintenance involved. There's a lot higher carrying costs. Your insurance tends to be higher. With a condo, you tend to get a better location for a lower price as well.
Yeah. New York City, especially this holiday season, in terms of tourists, locals, activity, does seem like it is getting pretty close to what it was like pre-pandemic. What is the commercial market telling us?
Yeah, so commercial is a mixed bag. We see retail spaces actually doing very well. People are shopping again, but there's a lot of consolidation among the retail spaces. And if you walk around, you're starting to see chains and brands of elements that you didn't see before. Nail salons, for instance. You used to see all these independent nail salons around New York, every ground level retail space. Now you're starting to see chains pop up because it's very expensive, and that's who has the capital to make things happen. If you change into looking commercial, or I'm sorry, looking industrial, that's also, a stronger point of the overall commercial market. And then data center, that's a new element of the commercial market. We have all of this cloud storage that's needed, all of this computing, and so people are looking for data center storage in remote locations.
Interesting. And in terms of artificial intelligence, we know that certainly fueled many of the gains in the stock market. Second straight year of 20% plus growth for the S&P 500. My guest earlier saying that he's bullish on 2025 as well from a market perspective. How have we seen the AI growth play out in real estate?
So I don't think we've even seen the tip of the iceberg yet in real estate. People are using ChatGPT, to write their listing descriptions. That's basically where brokers are for the most part. Ryan Serhant just launched an AI-focused real estate venture. So I think that we're going to see a lot more interesting things like that come out and see how we can actually use it. Right now, it's floating out there, and nobody's been able to lasso how to use AI properly in real estate, especially on the customer side too. Backing into your perfect broker, your perfect house, it's got to be better than just a Zillow search, right?
Aaron Sykes, great to have you in studio. We hope you'll join, of course, in the new year. Aaron's a founding partner at Sykes Properties. All right, well, stay with us because the opening bell is fast approaching, and we'll have those details up next.
Gina, welcome to Floor Talk. It's great to have you on the show.
Thank you. Thank you for having me, Judy.
So, Gina, tell me, how has Bath & Body Works' focus on fragrance driven its success and customer loyalty for the past 30 years?
It's been an incredible, incredible brand, and I'm so honored, actually, to be leading it for the last 2 years. This is actually my second year anniversary, and the source of it has been just this incredible fragrance forward positioning, and if you haven't checked lately, fragrance is on trend for some time now. And we put fragrance in 12 to 13 forms. And what that means is we can have these beautiful candles, and that can be Winter Candy Apple, which, by the way, is celebrating its 25th anniversary today. So to your point about 3 decades of performance, but we can also put that in a foaming hand soap. We can put it in a pocket back hand sanitizer. We can put it in a fine fragrance mist. And while that seems simple, it is actually quite a feat to put a fragrance across all those different forms, and customers love it. They want to smell head to toe with fragrance. So it's a wonderful differentiated business model.
Head to toe and home.
True, right?
So now you recently released your Q3 earnings. What were some of the highlights?
We were really pleased with our third quarter. We beat expectations on the top and bottom line. We saw store traffic and conversion be positive and exceeding the benchmarks that we also track, which was great to see. We also had every major category grow. So that for us, that is body care, that is home fragrance, and that's soaps and sanitizers. So all growing. And we had some great newness as well. We're known for our innovation and our newness. We did a collab The one that we have out right now is Emily in Paris, which is great.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here at the Stock Exchange, and at 9:30 a.m. Eastern, just about 10 minutes away, NYSE-listed company Planet Fitness is going to celebrate the opening bell, officially kicking off the final trading session of 2024. Well, it's no coincidence that Planet Fitness is here this morning. The company is celebrating its 10th consecutive year as the presenting sponsor of the Times Square New Year's Eve celebration. Fitness club operator founded in 1992 and trading on the stock exchange since 2015, has about 19.6 million members, more than 2,600 clubs in all 50 states, the District of Columbia, Puerto Rico, Canada, Panama, Mexico, Australia, and Spain. Well, ringing the opening bell is going to be Colleen Keaty. She was named Planet Fitness CEO this past April and formally took the position in June. Our Judy Shaw recently sat down with Keating to talk more about our first half of the year on the job. Take a look.
Colleen, welcome to Floor Talk. It's great to have you on the show.
Judy, thanks for having me. I'm so excited to be here.
So, Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I've really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
We're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done consumer testing and consumer surveys, as well as how we've seen our members utilizing our clubs, we've recognized the opportunity to kind of shift our mix a bit and have a greater complement of strength in our clubs. So you'll see that pulled through both in the brand promise and how we're communicating that in our marketing messaging.
Now, Colleen, fitness is a competitive industry. How are you enhancing the member experience to retain and grow membership?
So certainly format optimization and getting the equipment mix right is one of the ways. It's also, we're uniquely positioned because we have a judgment-free, no gym intimidation environment. So we welcome all fitness levels, all members, wherever they're at on their fitness journey, whether you're joining a club for the very first time or you're training for your 5th marathon. So that's something that's quite unique to Planet Fitness. Also, with nearly 2,700 clubs across the U.S. and now growing internationally, we're within about a 12-minute drive of 170 million people. So we have the opportunity to reach most of America and offer them an incredible value at Planet Fitness.
Now, with evolving workout trends, are you adapting your gym formats to meet these changing preferences?
So some of that is equipment. It's also floor plan optimization. People want a little bit of floor space to grab a mat, drop a mat, pick up a couple of free weights and kind of do their workout their way. And we also see digital as an opportunity. So connecting with our members digitally enables us to really enhance our relationship with them, even when they're not inside the 4 walls of our club. We've got over 500 workout routines on our app today. And the Planet Fitness app is the most downloaded fitness app on the App Store. So it gives us great reach.
And what's your approach to store growth domestically and internationally?
Sure. Domestically, we see the opportunity to essentially double our footprint, to grow to 5,000 clubs domestically here in the U.S. And we also see a big opportunity internationally. Although I'll say with international growth, we want to be thoughtful and really not flag plant, but really grow in markets where we have an opportunity to get to scale and density and be a strong player in the marketplace.
And finally, Colleen, how are you preparing for the end of 2024, which is the important January sign-up period, and carrying that momentum into Q1 of next year?
For the 10th year, we will be sponsoring New Year's Rockin' Eve. So we'll be in Times Square on New Year's Eve again as the sponsor. And that puts us on a global stage and really puts us top of mind for consumers when they're thinking about their New Year's resolutions and what they're going to embark on for their fitness journey in 2025. And then also we'll see our marketing messaging reflecting our new brand positioning and our brand promise, and really bringing that messaging of growing strong together to life.
All right, well, exciting times ahead for Planet Fitness. It's wonderful to talk with you, Colleen. Thanks for joining me on Floor Talk today.
Thanks for having me, Judy.
All right, thanks to Judy Shaw for that interview, and don't go anywhere because up next we will have the opening bell.
I do want to talk to you about space investments right now are really flowing into startups. From an investment standpoint, talk to me about how the current economic climate we're in could impact the sector.
It's been a few difficult years in the capital markets, but things are starting to turn around. I think the Fed's decision to take interest rates down, 50 basis points cuts, is certainly impacting the public markets. It takes a little while for that to flow through to the private markets, but we are starting to feel some optimism, and there's a lot of reasons to feel optimistic when the last couple of years have been pretty uninspiring. So it's a good time just generally in the capital markets. Capital continues to flow. Innovation has continued to push forward in the space economy. And we're seeing not just, SpaceX and the big names, we're also seeing other new companies come up, make names for themselves and raise significant capital to go out and execute their plans. Every quarter we produce our Space IQ, Space Investment Quarterly, talking about the flows of capital, startup activity and investment trends in the space economy. We just published our Q3 report. We're showing $330 billion invested since SpaceX came online into 2,000 unique space companies.
Talk to me more about those key takeaways that you found in your Q3 report.
A few of the big ones, right, is that SpaceX has gone from underdog to apex player, right? They were tapped by NASA to go and rescue the NASA astronauts that were stranded on the International Space Station by Boeing. A big quarter for SpaceX. And they haven't had to tap the capital markets since 2022. They've raised a lot of capital, so the investment dollars have been strong in part due to SpaceX and going out and raising capital for what they're building. Now they're fueling their growth with revenue. So there's a big gap in the investment data that other companies are now starting to step up and fill. AI and geospatial intelligence data. So applying AI to data from space. We have way too much data coming in from orbit. We have decades of archived data. It's way too much for humans to get their arms around unless you
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here at the Stock Exchange. And in just a moment, NYSE-listed Planet Fitness is going to ring the opening bell and kick off this final trading session of 2024. Well, as we mentioned earlier in the show, the company is celebrating its 10th consecutive year as the presenting sponsor of Times Square's New Year's Eve celebration. And later in today's show, I'm going to be joined by Michael Phillips. He is a board member for the Times Square Alliance. He's going to dive into all things related to tonight's celebration in Midtown Manhattan. Set to be a rainy one, but still a celebratory one nonetheless. And as we flip the calendar year from 2024 to 2025, many Americans will be focusing on their personal finances. Michelle Singletary is going to join me with more on that on the other side. Here is a live look at the podium as we get ready to celebrate the final session this year. we got the good vibes going here as we look to round out 2024. I'm looking at fractional gains across the board for the major indexes, rounding out what has been a very positive year, the second straight year of 20% plus gains on the S&P 500. Well, before the ball drops officially in Times Square this evening, we do want to take a look at this trading day and how it's setting us up for 2025. Joining me now with more is Vance Howard, CEO and Portfolio Manager at Howard Capital Management. Vance, it's great to have you on the show. And are you in a celebratory mood as we look to round out 2024?
Well, 2024 has been a really nice year. We've been quite pleased with it. 2023 was quite good. 2022, not so much, but if you average the three together, I think you got, an 8.5%, 9% rate of return, which is positive. Last couple of days have been a little bit of a sell-off, which, we would love to have seen those days up, but it is the way it goes. So, but net, this year is going to be a great year for investors. And I think that next year need to be a very nice year also. So I think investors need to stay the course.
What is driving that optimism that you have, Vance?
Well, you've got a lot of different factors that are setting up. You got a strong labor market. You've got inflation that's dropping at a reasonable pace, so that's encouraging. Also, the Fed's dropping rates, even though organically, the 10-year Treasury's been going up, which is a little bit disturbing. I think that's what's putting a little bit of pressure on this year and rally. But there's a lot to be excited about. If Trump decreases regulation, I think that's going to increase profits. I just think there's a lot to be excited about. The cash on the sidelines, if you go and look at money market rate, the amount of money markets that are sitting on the sidelines, 6.7 trillion? It's just amazing the amount of cash that come into this market in 2025, especially if rates, would actually drop down and the Fed continues to drop rates. So I think there's a lot of optimism to be had.
What should viewers take away from the recent pullback that we've seen, Vance? Some have said that it's profit taking. Still, the S&P, I think, only dipped about 3% from its record high, so really nowhere near a correction.
Yeah, nowhere near a correction. But, the stocks that we all own, which are the high flyers, Magnificent Seven, they've taken it a little bit harder than the 3% correction on the S&P or maybe even the NASDAQ as a whole. So they pulled back a little bit. They've worked off a little bit of what we call a trough in the market. Even though that we're oversold now, it hasn't been much of a rally coming off this oversold condition over the past 2 or 3 days, which is a little bit concerning. But I think when you look at the 10-year Treasury, I think that's what's putting a little bit of pressure on the markets here at year end, and we don't know if that'll carry over to 2025 or not, but we'll be anxiously waiting and seeing. But I think that's having an effect. I also think there's a little bit of profit taking. You've had 2 really good years in the market. I think people are adjusting their portfolios, maybe taking some capital gains this year instead of pushing them into 2025. There's really no, direct answers to why the market's pulled back the past 2 or 3 days, but the trend's still up. As long as the trend's still up, you need to buy on every pullback.
Interesting. And Vance Howard, I should note here, one of the major themes that we saw play out in 2024, of course, was artificial intelligence momentum, fueling a lot of the gains, especially in the first half. Do you expect that to continue to be a winning sector in 2025?
Well, I think that you have to. I think that's really where the market's headed. I think AI is incredibly important. I think that it's not as impactful at this given moment in time as what it will be 2, 3, 4, 5 years from now. One of my favorite picks for the year is Salesforce CRM, and I think it's going to benefit a lot from AI. I think they'll be able to directly increase their output and reduce their overhead by using AI. And I think that's a great stock for 2025. And again, I love stocks that have recurring revenue. Salesforce has a great recurring revenue base. So I think that's a strong pick that AI is going to play a major factor in.
Yeah. Salesforce, certainly an NYSE listed company, as is Ralph Lauren. Vance, I see Ralph Lauren is on your radar as well. Are you expecting gains for next year?
I do. I think Ralph Lauren is just a great company. They're so well managed and they're growing. The retail outlet stores are incredibly interesting to go to, and they've got a nice little coffee shop in there. Their clothing is probably one of the top, retail outlets anywhere in the world right now, and I think they're only going to get more and more interesting to people. And I think their clothing's going to do quite well. Again, very profitable, very well managed, and they're pretty innovative in what they're coming out with as far as design, as far as what investors or what retail buyers would like to see.
So stocks can continue to rise even if we see fewer rate cuts. What do you think?
I think so. I think as long as the trajectory of rates are down, which it clearly is, I think that's a good thing and a positive thing for the market. And we don't have to have a whole bunch of rate cuts immediately. They can be spread out over the course of 2025 and still have the impact that we would like to have, which is the Fed is on our side. And I think that's really critical. Again, goes back to the trend. Don't fight the trend. Don't fight the Fed. The trend's clearly up. The HCM byline's positive. Pullbacks are viable, and I think you stay the course.
Vance Howard, CEO and Portfolio Manager at Howard Capital Management. Vance, thank you and Happy New Year.
Happy New Year to you.
All right, well, we've got plenty more to get to on today's show, NYSE TV Live. Stay with us.
Sharon, always wonderful to see you. Welcome back to Floor Talk.
Thank you. I love being here, as you know.
Oh, love having you. So you're here today. You actually just reported your third quarter fiscal 2024 results. So tell me, what were some of the highlights?
Well, thank you. Yes, we did. I think the biggest highlight is that it was the best third quarter in the history of the company. So that's a strong highlight. We were up 11% on our revenue and up 26% on our pre-tax profit. So very strong quarter. And I do want to mention, though, that in our fourth quarter year to date, also good, but we saw some softness in our e-commerce business, so we did narrow the guidance a little bit, tweak it a little bit, but we're still expecting right now to end the year with the fourth consecutive year of record results on a rev perspective.
All right, so Sharon, talk about your long-term strategy and your goal to continue expanding globally.
Our founder, Maxine Clark, who started the company well over 25 years ago at this time. And by the way, this is our 20th year on the New York Stock Exchange. But she always said that a hug was understood in every language, particularly a teddy bear hug. And the experience is such an important part. It's the way so many of our guests and our customers often meet Build-A-Bear, if you will, for the first time, is to come in and make their own bear. So that piece of the puzzle is important. And those three new business models are corporately operated, but that's the model that we've always used, actually, and then partner operated and then franchising. So it gives us a lot of latitude, and the latter two are more capital light, and that's what's allowing us to build out our store base. We have opened in 6 new countries in the last quarter, and we're now up to 20 countries, and we're going to have up to 600 stores by the end of this year, up from 500 just a few years ago.
Very exciting,
Yes.
very exciting. So tell me, are there any new partnerships you've had this year? Anything you want to share?
We team.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. In less than 15 hours, the iconic New Year's Eve ball will slowly drop down the 135-foot pole at One Times Square. And here's some fun facts that you may not know about this year's ball. Well, the ball is 12 feet in diameter, weighs, get this, 11,875 pounds. And this year's ball is covered with 2,688 crystal triangles varying in size. Now, the ball is capable of displaying a palette of more than 16 million vibrant colors. And for everyone probably already preparing in Times Square, including tourists, this will be a sight to see. Joining me now with more is Michael Phillips. He's principal, chair, and president of the real estate company Jamestown. He is also a board member of the Times Square Alliance. It's so great to have you today. And what can our viewers expect at the ball drop tonight?
Morning. Yes. Well, it's an exciting day. We expect over 1 billion people to see this over the next 24 hours. And it really is the last year for this ball. The new ball, which is coming in 2025, will be even more technically capable. This ball will be retired into the lower floors of the building in an immersive history experience, which will be open 365 days of the year and really will become the new visitor center for New York City.
Michael, there is rain in the forecast for New Yorkers tonight, but based on the data that we shared about this crystal ball, I'm sure tourists will still be able to partake in the celebration and see the lights. What can you tell us given the weather forecast?
Yes, well, I mean, there is a bit of rain drizzle in the forecast, but it's mild. So I think we're still expecting big crowds in Times Square. obviously we're simulcasting and broadcasting on cable and broadcast. We're also in a fortnight with on a gaming platform and engine, and have a virtual and a distributed platform online. So you can go to onetimesquare.com and you can get all those details.
What's the best way to experience this in person?
So in the square itself is amazing, and there's a lot of different vantage points. But really, I think it is to be. I would say it's to be on the north end of what's called the bow tie, with the biggest visual of the fireworks. And as we know, the drought is lifted, and so the rain. One positive thing about the rain is we get fireworks, so that's a great thing to see.
Mm-hmm. What are some of the VIP add-ons or special experiences that can run alongside the ball drop tonight?
Sure. So there's parties in the hotels around Times Square. There's a whole VIP experience which you can log into and get online for next year. But there's a series of dinners and events that happen around the evening as well.
Mm-hmm. Pretty impressive just how big this ball actually is. What goes into making this crystal ball?
Sure. So this ball is really the sixth ball, and is this one was built in 2008. It is obviously very complicated with 2,688 crystals. It has an interactive digital engine behind it. That technology, as we said, is quite robust. And to go up 135-foot mast on top of the building in all winds it's quite extraordinary. But as we move into next year, as we said, the new ball will be 3 times as technically capable.
Yeah. What does this do for the economy in Times Square? The amount of tourists, the amount of locals, Michael, that you anticipate will be visiting the area today?
Yeah, so we're expecting 1 million people to be in person, and there's an incredible flow. We owe the NYPD and the city and the mayor a great gratitude of thanks for making all this possible and keeping it safe and accessible and getting people in and out. The MTA obviously is a big partner here, so I think it really takes a village to pull this off, and I think it is, as we said, it's the most watched, most experienced turning of the year, the clicking of time. The ball and One Times Square is the only icon that really is tied to this new experience worldwide.
Are you going to be outside tonight, Michael?
I am. I will be here all night.
Happy early New Year to you. Thank you so much for joining us here on NYSE TV Live. That's Michael Phillips. He's a principal, chair, and president of the real estate company Jamestown, and a board member of the Times Square Alliance.
Thank you very much.
Thank you. All right, well, when we come back, history was made in the ETF space this year alongside that 20% plus return in the S&P 500. We'll have those details up next.
So at Daily Pay, we're really tackling the paycheck to paycheck cycle that so many people are living in. And we're doing that by a pretty simple concept, actually, disrupting the last thing that people wait for in life. If you think about the things that you wait for, right? You don't wait for your shows, you don't wait for food, you don't wait for a ride. Even if you're sick, you don't wait to see the doctor. You just get on telemedicine. But yet, people go to work every day and then wait 2 weeks or more to get paid. And it's creating this paycheck to paycheck cycle. So we are dismantling that by bringing earned wage access to people that can work and get paid in the same day.
And you actually work a lot with NYSE listed companies.
We do.
Talk to me about why you think your concept resonates so deeply with companies like Target and Kroger.
Well, companies like Target and Kroger, they see it is always incredibly difficult to hire and retain frontline workers, regardless of whether the economy is strong or whether we're in a weaker economy. It's always a challenge of really being able to retain great people on the front lines. And so they work with Daily Pay because they've seen that when employees are using daily pay, they stay longer. They're more engaged with their employer. And in fact, they feel like they're in a situation that's a win-win with their employer.
How is earned wage access impacting the overall employee experience?
Earned wage access is an incredible impact to the employee experience. In fact, our clients will tell us that it's in the top adopted benefits across their workforce. And it's because it's something so simple, right? If you think about, people are working to obviously have money to pay their bills. But those bills don't always come in 2-week increments. So it's very hard to plan life, even if you make a monthly budget. If your rent is due before your payday, right, that's not helpful.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the Stock Exchange. Well, as 2024 comes to a close, traders have had an active year, fueling expectations for positivity in 2025. In fact, a record $1 trillion plus poured into U.S. ETFs this year. That shattered the previous record set in 2021 and represented a welcome embrace of U.S. stocks, with the S&P 500 up about 24% this year. Joining me now with what that could mean for your personal finances is Michelle Singletary. She's a personal finance columnist at the Washington Post. Michelle, it's great to have you on the show as we look to round out 2024. And based on some of this data, how should these record inflows into U.S. stock funds this year inform investors heading into 2025?
So, well, Happy New Year. I think what it tells folks is that we've had a lot of things happen over the last couple of years. Lots of people are kind of scared to be in the stock market. But if you are a patient investor and you have time on your side, that the numbers bode well for you to continue to invest and be prepared to save for your kids' college fund or your retirement.
Why are ETFs attractive investment in vehicles when it comes to long-term strategies?
Well, I think some investors like the flexibility of being able to trade during the day. I personally like mutual funds, index funds. That's like my go-to. But I love that there are a variety of ways for everyday regular investors to be in the market the way they feel comfortable.
What's the best way, you think, for people to take stock of their finances as we round out 2024 and start 2025?
I think the most important thing is to look at exactly what you're investing in. When I talk to most investors, and many people are invested through their workplace retirement plan, let's be honest, most regular people, that's how they're investing. And they're either scared to look or they don't look at all. They have no idea what they're invested in. They just know somebody smartly told them to invest. And so this is the perfect day, actually, to pull up what you're invested in, look at how it performed over the year. Maybe you're not investing enough. And so now in the new year, you can maybe up those contributions through your workplace plan so that you can meet those retirement goals down the road.
And Michelle, of course, we know that there's a lot of lessons, right, that our finances can teach us, both the good and the bad, as people do take stock of what they learned and maybe some resolutions for the year ahead. How should they be looking at the good and the bad when it comes to lessons learned?
So I love looking at both what I did right and what I did wrong. So when you look at what you did wrong, a lot of people want to beat themselves up, but I look at it as, okay, this is a really good lesson. I wasn't paying attention or I wasn't investing enough. And so that to me is motivation to do better. And you look at the good because you need to have something to cheer yourself on. So maybe you aren't investing enough, but what you invested did really well. So you pull those two together and use both of them as motivation to do better if you are not happy where you are. I love making New Year's resolutions. I know some people are like, oh my gosh, because lots of studies say that by February people have fallen off. Like you promise yourself to exercise and then you never use that membership. But I think every year gives you a chance to change. And I embrace that. So maybe I didn't reach all my financial goals last year, but now I got another clean slate to try it again. It's like when inventors, they keep doing things until it gets right. And so I love that this time of year when you get a chance to like just write it all out and say, this is what I'm going to do for the new year, and go for it.
Yeah, I like that too, Michelle. Of course, a credit report and a credit score can give our viewers a sense of how they are doing. Why does that credit report matter? How does it matter, for instance, if you want to buy a home? How does that factor into those decisions?
Yeah, so, credit scores are so important. Obviously, it's a big piece of what you can afford. The higher the credit score, the better the loan package that you're going to get. And so, but listen, if you're deep in debt, right now, I would rather you focus on getting out of debt. Don't worry so much about your credit score. That's going to improve if you get out of debt. And I just think it's a number. And I'm going to say something that's probably going to shock people, right? People are like, oh, I have this kind of credit score, but really, what does it say? I'm a good debtor. And I like to get people out of debt. And so don't be so proud that you have a big credit score, because all it means is that you know how to manage debt. You know how to manage debt, but it's still debt. And I feel like debt is a weight on your shoulders. So try to do whatever you can to get out all your debt, including your home mortgage.
Michelle Singletary, personal finance columnist at the Washington Post. Michelle, thank you so much, and Happy New Year.
You. Yeah, Happy New Year to you as well.
All right, well, as the clock ticks down toward midnight and the start of the new year, the NYSE is one clock that has been making time for over a century. NYSE Curator of Historical Archives, Anna Mello, takes a closer look at this artifact.
Although the New York Stock Exchange was founded in 1792, it took more than 70 years for the budding exchange to purchase property. The New York Stock Exchange opened the doors of its first permanent building in 1865, and we've been right here on the corner of Wall and Broad ever since. That structure was demolished to build our current home on 12 Broad Street, but a few pieces of the old stock exchange were preserved, including this glorious walnut wall clock. This clock was custom built for the New York Stock Exchange and made right here in the great city of New York. The mechanism was completed in 1865, and when the cabinetry was completed in 1867, it was ready for action. The clock came from the shop of William F. Ladd, whose signature is visible on the pendulum calibration plate. This regulator clock runs on a movement using a pendulum and gears, and was far more accurate than other contemporary styles of timepiece. Regulator clocks were initially used in astronomical observatories and clock shops, or anywhere that required immense precision. Most clocks of this era would easily become inaccurate due to heat and friction, but the New York Stock Exchange boardroom clock was built to minimize time drift and ensure that the NYSE's marketplace ran smoothly and accurately. Its innovative design utilizes a liquid-filled pendulum, which is better able to compensate for the changes in temperature. This clock was built for such precision because it was used to measure trading windows when the New York Stock Exchange operated as a call market. Securities were traded one at a time, in increments of 5 minutes each. The time of day didn't matter as much as which trading window one was in, hence the unusual choice of clock face. At the end of each trading window, the president of the exchange would bang a gavel to signify that the trading of a particular security is over, and the time has come to move on to the next one. That is why, even today, when the closing bell is rung at the New York Stock Exchange to close the markets, we still bang a gavel to signify the end of trading securities. Today, the companies that list their stock on the New York Stock Exchange are as diverse as they are numerous. Some of the bank, railroad, and utility companies that listed their securities in the 19th century are still listed with us today. And they are now joined by companies in such varied industries as aviation, outerwear, biotechnology, innerwear, data security, footwear, cloud computing, and maquillage, just to name a few. The clock was first installed on the old trading floor in 1867, but by 1871, the New York Stock Exchange had by necessity adopted a groundbreaking new market model. The second industrial revolution was picking up steam on the heels of the first, mechanizing the world and fundamentally changing the way we live our lives. The wealth and population of industrializing nations increased at a breakneck speed, and what fed this growing and globalizing world economy was capital. Inventors, entrepreneurs, and governments needed funds in order to realize their visions, and naturally turned to capital markets to raise said funds. One of the inventions of the technological revolution that inexorably changed the way that all securities exchanges operate was the stock ticker, invented by Edward Callahan the same year as the New York Stock Exchange clock was completed, 1867. Brokers, businessmen, and anybody else invested in financial markets now had access to continuously updated stock prices and could make decisions accordingly. As a result of these changes, more companies and governments listed their securities on the New York Stock Exchange, trading volume increased, and the quotation book grew from 30 securities up to 300. Under the call market model of trading securities in 5-minute increments, the New York Stock Exchange was facing the prospect of a 25-hour trading day. Thus, in 1871, only 4 years after this clock began its work, it became obsolete, as the New York Stock Exchange became a continuous marketplace for the first time. The New York Stock Exchange pioneered this market model, employing specialists operating as points of sale alongside brokers in an open outcry format. The specialist and broker market model was adopted by exchanges worldwide and continued to be industry standard for decades. But today, all but one has closed its trading floor. When this clock was being utilized, there were about 30 securities listed in the New York Stock Exchange quotation book. Today, the NYSE trades 8,000 securities, including over 2,300 listed domestic and international issuers and 70% of S&P 500 companies. Of course, far more has changed here at the New York Stock Exchange and more broadly in our markets than the number of listed companies. 150 years after the New York Stock Exchange first became a continuous marketplace, today we can look back over a century and a half of evolution that has ushered in countless technological innovations that have increased efficiency to an astronomical degree. In the 1800s, when the New York Stock Exchange operated as a call market, in 5 minutes, one loan security was traded, with no guarantee that even a single transaction would take place in that allotted time. Today, in the span of 5 minutes, our industry-leading technology is capable of processing over 1 billion messages. Each message is processed reliably at lightning-fast speeds in about 1/10,000th of the time it takes to blink your eye. Back in the 19th century, the amount of money that changed hands in the space of 5 minutes ranged from $0 to several hundred. Today, our peak notional exchanging hands in a 5-minute window is more than $150 billion, counting equities alone. Today, across our 5 equity and 2 options exchanges, we continue to see ever-increasing demand, resulting in 5-minute peaks of over 2 million individual trades where 3 billion shares traded hands across 18,000 different listed equity and option securities. Time is immutable. Time cannot be rejected or escaped, but it can certainly be measured. Nowhere is the measure of time more imperative than in a securities exchange. For 157 years, this clock has been diligently ticking away, keeping time in the home of the epicenter of global capital markets, the New York Stock Exchange.
Time is something to honor indeed, and of course, as we look to round out 2024, thank you for spending your time with us here on NYSE TV Live. From our entire team, we wish you a very happy New Year as the celebrations get underway here at the Stock Exchange and, of course, in Times Square as well. I'm Kristen Scholler at the New York Stock Exchange. Have a wonderful day, a happy New Year, and we'll see you in 2025.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing. This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.